The rally is also being driven by AI optimism. This is after Micron reported earnings. They came in stronger than expected, and that guidance really blew it out of the park, showing us there's demand there. Joining us now is Michael Lee, founder of Michael Lee Strategy. It's always great to see you, Michael. The Micron numbers speak for themselves. It was that guidance and what the management said about demand for AI chips that will function within an AI capability moving forward. That's what some people are worried about when it comes to all of these chip stocks, that the demand either may slow or drop off in some way. They also talked about competitive pricing holding up. I imagine that's been good for shares of NVIDIA too.
Well, look, the bear argument against all of this AI investment, all of the spend on NVIDIA chips and all the different components is where is the profitability? Okay, how is this going to end up being paid? Who's going to pay for this and how long can we make this going on? Is this just a fad? And the CEO of NVIDIA, Jensen Huang, put that to sleep 2 weeks ago when he said for every dollar a Microsoft or an Amazon or a Google spends on a NVIDIA chip, they can turn around and rent it out for $5. Okay, right now, all of this AI infrastructure that's being built out is supply constrained. They simply cannot meet the needs of demand, and we are very much in the first inning. So I think all of these stocks are cheap. Micron is still down 30 or 40 bucks from its 52-week high because they said themselves they're going to spend about $8 billion building new factories so they can produce more, produce better chips to go along with this. I think this is a multi-year trend, and it's not slowing down anytime soon.
Michael, I want to stay on AI and profitability, but go to an adjacent space. So there are reports that OpenAI is thinking about becoming a for-profit company, even giving CEO and founder Sam Altman equity. This would be a major departure from their nonprofit status. Does this change your outlook on OpenAI and kind of that large language model space that we're seeing really break out right now?
No, not at all. And I think, you have this, I think what you're seeing is them being honest with the rest of the world by becoming a for-profit company. These tech overlords in Silicon Valley are not these altruistic, well-being, well-giving people that they make themselves out to be. But I would say OpenAI has a competitor coming in the form of, I believe Google's platform is Gemini. Elon's got Grok. There'll be a lot of competitors to this, but I think OpenAI, like a Netflix in the streaming world, they will always have this first mover advantage. They'll end up being the biggest, most profitable. And now that it will be a for-profit company, the chance of it becoming public or for other individual investors to get involved in one way, shape, or form or another is a good thing for investors in the long run, in my opinion.
Michael, let's look ahead to the rest of the year. I thought the Fed was going to do 50 basis points, and they did. But I thought after that, we might see another quarter before the end of the year. I've been blown away by how many people are saying we could see more 50 basis point cuts this year. It becomes a credibility issue, I think. What's the Fed going to do, in your view?
Great question, Brian, and it's just awesome. I was on after EJ Antoni because he brought this up a few days ago in that banks, large and small, are sitting on massive losses in their held-to-maturity portfolios, and while they don't have to realize that on on a mark-to-market basis, it does affect their collateral. So if you have tens of billions of dollars of bonds trading at 75 cents of the dollar, and the Fed cuts rates substantially, so those go to 95 cents, it does free up a lot of shelf space in the capital markets. Yeah. And you can still see the stress in banks with 30-year mortgages. Their 30-year mortgage is close to 7%, even though the 10-year Treasury is at 3 3/4, which means your 30-year fix should be somewhere around 5.5. And that extra spread, in my opinion, shows stress in the banking market. So I think what the Fed's doing is, yes, a little bit political, yes, a little bit weakening the labor market, but there's also a lot of problems on bank balance sheets. And I think if you look at it in that lens, it makes sense to see another 50 basis points at least by the end of the year.
And it's really interesting because Janet Yellen gave an interview this morning and she said, oh, no, the banks, they're very well capitalized. Mike Lee, thank you for being here.
Thank you for having me.
Coming up, Kamala Harris set to